Imagine having $1,000 to invest. Where would you put it? Let's delve into that thought in today's challenge. We're going to virtually invest $1,000 in 5 different ways, tracking the performance of each. The world of investing is broad and multifaceted, offering numerous paths to grow your wealth. By diversifying our investments, we're hedging against the unpredictability of markets. Today we'll explore 5 different avenues, each with its own unique benefits and drawbacks. We'll journey through the thrilling highs and lows of the stock market, dip our toes into the world of real estate crowdfunding, navigate the peer-to-peer lending landscape, and even venture into the volatile realm of cryptocurrency. Our aim, to help you understand the many faces of investment and empower you with the knowledge to make savvy financial decisions. So, are you ready to take on this $1,000 investment challenge? First up, the stock market. Ever fancied owning a piece of a big company like Apple or Tesla? Well, that's precisely what investing in stocks is all about. It's like buying a slice of a company's future, and as the company grows, so does your investment. Sounds pretty exciting, right? But remember, every rose has its thorns. The stock market can be a roller coaster ride with its high peaks and deep valleys. It offers the potential for high returns, but it's not without risks. Companies can underperform, and stock prices can drop. It's not a game for the faint-hearted. So, how do you choose which stocks to invest in? It all comes down to research, understanding the company, and keeping an eye on market trends. And don't put all your eggs in one basket. Diversification is key. Spread your investments across different sectors and companies. That's investing in stocks for you. High risks but high potential rewards. Next, let's talk about real estate crowdfunding. Sounds fancy, doesn't it? Well, it's a lot simpler than you might think. Crowdfunding in general is where a large group of people pool their money together to fund a project or venture. Now apply that concept to real estate. Instead of needing a mountain of cash to buy a property, you can join others and collectively invest in real estate projects. This method allows you to own a slice of the property pie without needing to fork out large sums of money. The potential returns can be quite attractive, but like all investments, it's not without risks. Real estate markets can fluctuate, and the property may not always appreciate in value. Also, keep in mind that your investment may not be as liquid as others, meaning it could be harder to convert back to cash quickly. So, that's real estate crowdfunding, a way to dip your toes into property investment. On to peer-to-peer lending. Ever thought about being a banker? Now you might be wondering, how can I do that? Well, peer-to-peer lending makes it possible. It's a unique platform where you can act as a lender to individuals or small businesses in return for interest. Imagine it as a form of crowdsourced banking. Here's how it works. You put your money on a platform that connects you with borrowers. You lend your money, they pay you back with interest. Simple, right? But here's the kicker, the returns can be significantly higher than traditional saving accounts or bonds. However, it's not all sunshine and rainbows. There are risks involved. The biggest one being default. That's when the borrower fails to pay back the loan. Unlike a bank, you don't have the same protection if things go wrong. So, that's peer-to-peer lending. High interest returns, but beware of the risks. The key, as always, is to do your research and diversify your investments. Now let's dive into the world of cryptocurrency. Ever heard of Bitcoin? Cryptocurrency is a type of digital or virtual currency that uses cryptography for security. It operates independently of a central bank, making it a decentralized form of currency. Bitcoin, the first and most well-known cryptocurrency, was created in 2009 by an unknown person using the pseudonym Satoshi Nakamoto. Now, why would one consider investing in cryptocurrency? Well, it's simple. The potential for high returns. Some early investors in Bitcoin, for example, saw their investments multiply by several thousand%. Sounds tempting, right? However, it's essential to remember that the world of cryptocurrency is not all sunshine and rainbows. It's characterized by significant risks and extreme volatility. Prices can skyrocket one day and plummet the next. It's a roller coaster ride that's not for the faint-hearted. That's cryptocurrency for you, a high-risk, high-reward investment. All right, we've covered a lot today. Are you feeling more confident about investing that $1,000? Let's take a moment to recap what we've learned. Firstly, we dived into the stock market. Remember, stocks represent shares of a company, and when the company grows, so does your investment. We talked about how it's crucial to research the companies you're interested in, understand their business model, and keep an eye on market trends. Next, we explored the world of real estate crowdfunding, a way to invest in property without the need for huge capital. It's like buying a piece of a building and earning a share of the rent. We emphasized that while this method can provide steady income, it's important to understand the market, the property, and the platform you're using. Then we moved on to peer-to-peer lending, a unique and interactive way to invest. By lending your money directly to individuals or small businesses, you can earn interest. It's a more hands-on approach, and while it can be rewarding, it comes with its own set of risks. Thorough research and understanding of the borrower's credibility are key. Our fourth investment method was the volatile yet potentially lucrative world of cryptocurrency. With crypto, you're essentially buying digital assets that can increase in value over time. However, it's a high-risk, high-reward game, requiring a deep understanding of the technology and trends. Throughout this journey, we've highlighted the importance of doing your own research before investing. Every investment method has its unique risks and rewards, and what works for one person might not work for another. That's where diversification comes in. By spreading your investments across different assets, you can balance out the risks and potentially earn more in the long run. Remember, every investment has risks. It's about finding the right balance for you. So, where will you invest your $1,000?